You've seen a more nuanced story because you had a lot of money coming out of the grayscale product. But if you look at the new ETPs, they're doing exceptionally well. I know BlackRock's is over $1 billion. Here at Bitwise, we're $250 million. Those are among the most successful ETF launches this year. So I think whichever way you look at it, these are a grand slam success. And the key thing I want people to know is that in ETF land, typically the first year is the weakest year. Usually the second year is bigger than the first, and the third is bigger than the second, and the fourth is bigger than the third. So this is a down payment, and it's a really big down payment. And I think actually they're going exceptionally well.
Matt Hougan begins by highlighting the remarkable success of Bitcoin ETFs. He points out that these ETFs have become the most successful of all time, amassing $18.5 billion in assets, far outpacing previous records for ETF growth. This tremendous success is not just limited to Bitcoin, as Ethereum-based products have also experienced substantial growth, with institutions like BlackRock leading the charge. Hougan underscores that Bitwise itself has accumulated $250 million in assets, placing it among the most successful ETF launches of the year. What's important to understand, according to Hougan, is that ETF growth typically accelerates after the first year. While the initial inflow is significant, he stresses that the second, third, and fourth years often see even higher rates of growth. This, he argues, is just the beginning of the ETF era in crypto.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
These are among the most successful ETF launches of all time. I mean, the Bitcoin ETFs are the most successful of all time. They pulled in $18.5 billion in assets. That's 3 to 4 times over the previous record for the fastest growing new ETFs. So it's a grand slam. On the ETH side, you've seen a more nuanced story because you had a lot of money coming out of the grayscale product. But if you look at the new ETPs, they're doing exceptionally well. I know BlackRock's is over $1 billion. Here at Bitwise, we're $250 million. Those are among the most successful ETF launches this year. So I think whichever way you look at it, these are a grand slam success. And the key thing I want people to know is that in ETF land, typically the first year is the weakest year. Usually the second year is bigger than the first, and the third is bigger than the second, and the fourth is bigger than the third. So this is a down payment, and it's a really big down payment. And I think actually they're going exceptionally well. You've probably heard me say this. We're in the ETF era of crypto. So I think they're going to be ETFs on a wide variety of ETPs. XRP specifically, it has a very vibrant community. It's been around for many years and sustained that community. It has a novel consensus approach that's been working at low inflation rates. And it has interesting and evolving use cases. My general view on crypto, I'm an index investor at heart, right? I come from the sort of index investing side. My general view is we are still in the early stages of crypto, and no one knows exactly how it will play out. And so we want to offer investors access to a wide variety of assets. XRP is one with a strong community and a strong track record and a strong history. There are people with positive views. There are people with negative views. We understand that, but just if we can structure a low-cost, secure way to access that, we think that's an improvement for the market. I think there's a major unlock coming in the stablecoin market. Stablecoins are a killer app of crypto. They've gone from zero to $150 billion without regulatory clarity. If you listen to Congress, the thing they agree on most in crypto on the Democrat and Republican side of the aisle is stablecoin legislation. I think the US wants stablecoins. It's a way to export the dollar. It's a way to sell more treasury debt. It's a way to improve finance. Big finance wants to get into stablecoins. They're looking at Tether making more money than Goldman Sachs and saying, hold on, we want a piece of this pie. So if you have Wall Street, crypto, and Congress all aligned, I have a very high confidence that we're going to see breakthrough stablecoin legislation early in the new congressional season. And if we do that, I think it's Katie bar the door. I think it's Bank of New York. I think it's JP Morgan. I think it's Visa. I think it's every major. And so I think $1 trillion in 2 years is probably conservative.
Conservative,
right?
Yeah.
There's $10 trillion in money market funds. Stablecoins are going to be a better version of that. There's so much dollar deposit. And that's just in the US. You go globally and you can access dollars. I think $1 trillion is easy. So I would take the pro side of that poly market if it opened and if the regulators let me invest in poly market. I think as more regulated players want to interact with stablecoins as opposed to unregulated players, that biases towards Circle. I also think Circle is going to face more competition from traditional firms getting into the space, from PayPal marching into the space, from Revolut marching into the space. But I'm very bullish on USDC and its future. I also think that the level of sort of competitive moat in the stablecoin space is probably going to get a lot smaller as we get more regulation. Regulation substitutes for trust. And so you can see new entities gain scale really fast. And I think you could see a flippening in the stablecoin space. Look, I don't think Tether is going away. Incredible business, incredible footprint, particularly overseas. But do I think USDC will gain share? Yes. Do I think regulated stablecoins will become the dominant player? Yes. Is there a history in the crypto market of seeing that shift from unregulated venues to regulated venues? Absolutely. Look at where trading takes place, right? So I think we're going to see that same migration in the stablecoin space. I'm very bullish on Circle and on its competitors on the more regulated side of stablecoins. A lot of people, before we had spot ETFs, a bunch of firms filed to offer future-based ETFs, and we were one of them. But once you have spot ETFs, those are more efficient than futures-based ETFs. So what do? I obviously can't speak beyond what's in the filing, but what the filing shows is we're converting those strategies to rotate between, let's say, Bitcoin and treasuries. So if the market is in a positive momentum period where Bitcoin's price is rising and the 10-day moving average is above the 20, they'll be in Bitcoin. And otherwise, they'll be in treasuries if the market is falling. I would just say, momentum is the most established factor in all asset classes, in stocks, in bonds, in real estate, in commodities, and indeed in crypto. There's a big academic literature on that. And so we're just trying to offer a new strategy that captures that momentum aspect for people who are worried about those big pullbacks in crypto, which, quite honestly, is a lot of us. So I think this idea is to rotate out when the markets are in that position.
Hougan then moves on to discuss the future of crypto investment strategies. One of the most important shifts he identifies is the growing interest in diversified crypto portfolios. While retail investors may still be focused on individual assets like Bitcoin or Ethereum, institutional investors are increasingly seeking broad exposure to the entire crypto market. This, he argues, mirrors how institutions invest in stocks, bonds, and other asset classes through diversified funds rather than single assets. As institutional capital continues to flow into the crypto market, Hougan predicts that diversified crypto portfolios will become the norm, offering a safer, more balanced way to invest in this emerging asset class.
The funny thing about crypto is it's one of the only markets where people are still primarily focused on single exposures. If you look at the equity market or you look at the bond market, no one's buying one stock. They're buying a basket of stocks. No one's buying one bond. They're buying an ETF of bonds. Our view is that the same is going to be true in the crypto market. As you move from primarily retail to primary institutional capital, they're going to want diversified exposure. That's the way institutions invest. That's what they're taught in school. That's what they're taught in their careers. And that's a dominant paradigm. So I think you're going to see more of these diversified exposures, more of people wanting to make a bet on crypto and not make a bet on, Bitcoin individually or Ethereum individually. Let's just make a bet that crypto and public blockchains are going to be more important in 10 years than they are today. That's a bet I have very high confidence in. And the way you would express that is a diversified portfolio. And I think it really is, sort of happening and exploding right now. So kudos to you on the idea. The thing about these ideas, which people forget, is, we all know that technologies go through this two-wave motion, right? Where there's a hype cycle and then a crash of despair and then the slope of enlightenment where they really start going. And that's what I'm seeing in the gaming space. We had the hype cycle, we have the pit of despair. But if you look past the surface and look at the numbers, you're seeing real and substantial growth. If you look at the pipeline of games coming into the space, it's very broad, which suggests we're going to have winners. If you think of the performant aspects of the underlying blockchains and the throughput and low cost that's now enabled in them, you can imagine the scale that you're going to get. So I think you're looking at it at the right point. You're like 6 to 12 months ahead of where the market and the media coverage is, because you're starting to see traction, but people are stuck on the old narrative that Web3 gaming was a bust. And that's just not what the data increasingly suggests. I never count out the US, is my general view. We always get around to it eventually and then come and play a significant role. Certainly you're seeing, and the regulatory environment here has pushed things overseas. And you're seeing more excitement in Asia. I know a lot of people came back from the Token 2049 conference, really fired up about the opportunity abroad. You see things like this news on Japan. You see Japan reconsidering taxation on crypto assets.
Right.
You certainly see a lot of Web3 activity over there. But can the US catch up? Of course we can catch up. I think we're close to a sort of sea change in regulatory attitudes towards crypto and Web3 in the US. I think we're going to see that in the coming year or two ahead, almost regardless of what happens in the November election. So could we catch back up? Absolutely. But the beauty as an investor is it almost doesn't matter, right? Crypto is inherently global. The blockchains that underpin it are inherently global. And you can benefit from that activity wherever it takes place around the world. And the history of crypto is sort of a history of different countries squeezing it from a regulatory perspective and the balloon expanding in another geography. I think we've seen some of that with the US versus Asia, which you're referencing, but there's always some place that it goes. There's always a release valve. And, I think that's sort of the core thing to remember through all this.
Hougan touches on the broader geopolitical landscape and its impact on crypto. He acknowledges that the U.S. regulatory environment has pushed much of the innovation and excitement to other regions, particularly Asia. However, he remains optimistic about the U.S. catching up, especially with potential regulatory changes in the coming years. Crypto, after all, is inherently global, and Hougan emphasizes that investors can benefit from its growth regardless of where it originates.
Please like and subscribe my channel.